Welcome folks, this is the market review for Aussie dollar on Friday 15th of December. So we had a good setup around the London New York open. So we had this run high. So there was this inefficiency. We also had the sell side residing below, and also these relative equal lows. So we had a run on that, and then trading inside these bullish order block. So this was at around 8:30. I think we had news, and then price went up, taking out these relative equal highs. As you can see, this high, and this high. So we had that taken out, and then we had a reverse inside the inefficiency, and also we had this inversion fair value gap, whereby we could have waited for price to come inside the fair value gap and then anticipate for longs, which were like that. So this one was also a good trade. It was in between the PM session, whereby we had this trade inside the inversion fair value gap. Also we had this volume imbalance. We did not trade into that, but we traded inside this gap. So but what I want us to look at is this. So we had that. So if you go to the 1 minute chart, that was on Friday. So we had two chances to get into the trade. So we had this drop inside the gap, and also inside the inversion fair value gap. So that will be your entry, and your stop be placed below this low. Your second, this was a market structure shift, that, and then we had this, let me this one here first. So we had this gap right there, so you could be going long inside the gap, placing your stop below this low or below this low. So we had two entries, right? One there and another one, and also we had another one after this market structure shift. This candle, when this one closed, this candle came inside this gap. So that one was also an entry for you. So we had that, and could be aiming for the buy side that was residing above. So we had that was a 6-hour trade. It was quite nice. As you can see, we had quite a clear buy side. So we had this, I think this was news which pushed price to the downside, and then we had that aiming for these relative equal highs, and also this high, and we had that right there. So that one was quite fruitful. That was Friday's trade. So yeah, that's it. So we had I'm going to do all the market review for Aussie dollar in this video. So that was Friday. So we had Monday right here. So we had actually, we can call it 1 or 2 trades, or we can say 3, but we had this run high above the Friday's buy side liquidity right there. So we had that, and also we had a run on that. So while we are up here, we could be framing shorts and aiming for this low and this one, and then we are quite a clear sell side residing below these lows. And also we had these as you can see, these are volume imbalance, as you can see, only the wicks traded into each other. So we did not have anybody connecting with each other. So we had, that was a volume imbalance. So we had that, so we could mark that as something like this, that, then extend it through. So that will be a draw on liquidity after taking out the sell side. So while we were up here, we had a run to these lows, and then during New York Open, we had a run higher again inside these inefficiency, as you can see. So we have an inefficiency right there, this one. So we had that run at around 8, which is in between the silver bullet window of time. So we have that, then we ran to a premium inside the fair value gap, and then price broke lower. So we, from there, we could short and aim for the sell side. So if you go to a 1 minute chart, sorry, 1 minute chart, so whenever I show these things, sometimes we endure losses, and some people fail to show the loss. Now we had this, I think it was the one. So we had a run high taking out the buy side, and also Fridays. So we had this run lower, and then went up, taking out these highs right there, and then this was the low that was taken out right there, and then we had this gap right in there. So you could be going short inside the fair value gap right there, your stop above that, and you aim for these lows, aim for that. So that was a 10-hour trade which was nailed in right there. So that was it for the London Open kill zone. As you can see, this is in between 2 to 4. Sometimes you extend it to 5 or 4, but at times it happens between 2 to 3, which is fairly okay. It doesn't matter. So within 2 to 5, a setup should have formed. If it has not formed, then you wait for New York Open kill zone. So we had that, and then during New York Open we had this run high, and it took out the buy side, and we traded inside the 15-minute fair value gap. So we had run into that also inside here. So we had that, and then price showed us the willingness wanting to move down. So we could have used this inefficiency as an inversion fair value gap, and then anticipate for a run lower into the relative equal lows that were residing below. So you could have gone long, short, sorry, right, either there, or you wait for this run high inside the inefficiency. The stop should be there above that high, and then you place your TPs, and also you know where to take your partials, right below these lows, this one, these lows. So those are places where you should be taking off something to pay yourself. So we had that. So this was that. But if that one passed you, there was another one. So we had this is a swing low, buy side taken right there. So break lower, we had this inefficiency right there. As you can see, we traded inside the inefficiency, inside this candle. So that would have been your short entry, and your stop right above that that high, and then your targets below the relative equal lows that we had. So this was quite a good trade. We had I think it was let me see, this was a 15.7 hour trade. So that was it for Monday, which was yesterday. So at that, so go to a 15. I'm moving fast because we're just repeating the same thing over and over and over again. So this is where backtesting really comes in handy, whereby you just doing the same thing every single day. So today we had this setup. We had this drop at around 2, exactly at 2, taking out that low, and we traded inside the bullish order block right there. So this dropped down, and we had these relative equal lows right there, and also we had this inefficiency inside that. So we traded down first during at 2. We had that run to the downside, and then a reverse to the upside. We could be aiming for these highs. So as you can see, today we had a losing trade right there. You may call it a losing trade, or also a break-even trade, because it all depends with where you want price to be for you to go to break-even. So we had these a break-even trade, then price went and still repricing higher and higher. So let's talk about this entry and also this. So the reason why I went short right here is because we had already taken out these the buy side. So it was ideal for me to go short and aim for a run below these lows, but we did not get that. So let's go to a 1 minute chart. Sorry. So this was the entry. You could be going long right here. This was quite aggressive entry. So we had that. After taking out the sell side, and then you could be aiming for that high. So this was a 10.5 hour trade, which was a good one. This is a good trade for a silver bullet. So partials could be taking partials above these highs and then going into break even, and then maybe if you anticipate for a run above this high, you got that. So that was it. So this was the trade. So this was me going short, but it ended up being a losing trade. So we had this run high, taking out that high, and we had already taken out the buy side, as you can see. So I was anticipating for a run lower, taking out these lows and eventually these lows and so on and so forth. So we had that run high. I went short right there. Price went down inside the inefficiency and then reversed. So this was a losing trade. So you'll find losing trades. It doesn't matter. If you have a losing trade, you accept and you move on. So I guess that's it for today, and until I see you next time, be safe.